Good afternoon, ladies and gentlemen. Um, Today we are having our first YouTube live stream video for Sofri. So today we're going to be talking about a very topical issue concerning loan approval rates. And a lot of people have had issues getting approvals for their loans, and then when they apply for a loan and they get rejected, or one thing or the other happens and there are issues and they feel like maybe the charges on their loans are too exorbitant and stuff like that. And so today we're going to be having a live stream video, like we're having a live session now where we're going to talk about all those issues and all that there is to it with regards to getting your loan approved, how you can increase the success rate and the likes. So today we have our guest speaker who will be speaking by the name of Mr. Barnabas. So I'm going to read a short biography about Mr. Barnabas before he has the floor. So starting through, we can say that Mr. Barnabas is a seasoned professional with more than 19 years experience spanning sales strategy, design and management, customer retention strategy, credit risk management, loan origination and syndication, and business process reengineering. He has gained diverse work experience in various sectors, including security, consulting, commercial banking, insurance, fintech, finance companies such as Sovereign Finance Limited as divisional head, retail and business development before joining Links MFB Limited as chief operating officer and group head of sales, a subsidiary of DLM Capital Group. Now he holds a master's and MBA from Delta State University, Abraka, and a master's in marketing and sales from Rome Business School. He's a fellow of the Institute of Credit Administration, FICA, the Chartered Institute of Loans and Risk Management of Nigeria, and of the Institute Professional Managers and Administrators of Nigeria, FIPMA, and an associate of the Nigeria Institute of Management, and is chartered. He is a microfinance certified member of the MCIB of Chartered Institute of Bankers of Nigeria, and he has attended key management and professional training programs in Nigeria and overseas in areas covering sales management, assets, liability, business strategy, and leadership. So today we're going to be listening to him. So he's going to give us a rundown of how we can get started and things that we need to know to improve ourselves. So Mr. Barnabas, you have the floor.
Thank you very much, Austin, and thank you, viewers, for having me to anchor this program today. I'll start from the global perspective. Let's look at the impact, what lending is, and why people get turned down when they come to take loans. However, we need to look at the global perspective. Globally, it is perceived that people are denied the right to pursue their life of their own. And why this belief globally? It is because they are excluded in the financial sector, so to say. They are excluded in the formal financial sector where they avail services, financial services. They lack that access to financial tools. And these people, because they lack that access, they are not included formally in the financial service system. They tend to be impoverished, and then they tend to not meeting up their needs, their demands, meeting up their economic life, so to say. And we have, when we look at Nigeria as a nation, we are not excluded from the global scenarios or global issues affecting the world, so to say. And Nigeria as a nation, we have people in that bucket that are excluded financially. They are excluded from the financial sector. They lack access to financial tools. They lack access to funding, to loans. They lack access to financial technology. They lack access to financial literacy. They also lack access to proximity to banks, so to say. And then we have more of Nigerian adults in that bucket. From statistics, we can put as high as 36, 38% of Nigerians and Nigerian adults who find themselves in that bucket. So to say, they have needs for loans, but they cannot have access to loans to meet up their daily needs. Now, when you look at part of the United Nations Sustainable Development Goal, part of that goal says for nations to solve the problem of poverty, some of the problems they need to start doing is to increase financial inclusion in their system, which to say they need to encourage people, they need to encourage their citizens to start getting included in the financial system formally. When I mean included, they can now start having access to banking. They can now start having access to loans. They can now start having access to all the things that the financial service sector provides. And as a nation, we have identified that a huge percentage of our adult life, our adult people, find themselves in that financial exclusion position, which is they are not included in the formal financial service sector. So we have to understand the background before we move into the consumer lending space in Nigeria. So you would see that the market itself in Nigeria is a huge market where you have people who don't have access to loans to meet their needs. People, because they are not included, they tend to be impoverished. They cannot meet their daily needs. They don't have access to banks. They don't have access to the documents required to even own an account, so to say. All of these are challenges. And for us, while these challenges exist, there are great opportunities. So, as a system, we have other providers in the financial service sector who have come to say, oh, let's include all of these people into the mainstream financial service sector in the country. And that's why you find them today in the Nigerian market. Consumer lending is an emerging market. When we look at statistics, according to Vanguard of January 17th, 2022, it is recorded that in the last 1 year, the Nigerian consumer lending space has grown from what it used to be by about 38%. And it is estimated that over 2 trillion naira in terms of consumer lending loan has gone out of the financial system, gone out of the banks, so to say, and then the fintech industries to the Nigerian populace who desire, who need loans to meet their needs. And when we talk of loans, loans are for me, I see them as instruments to combating poverty. I see loans as channels by which people can make ends meet. And if we have said that the UN Sustainable, part of the UN Sustainable goal is to see that we include people in the formal financial service sector, which to say, invariably, we are saying they should have access to loans. Access to loans. And we have also recognized that the Nigerian lending space, consumer lending space, has grown over time. As I speak with you, I know it has grown to around 42%. As at the first quarter of the year, it was around 38% when compared to the previous year. And then when we dig deep to see the numbers, in October last year, around when compared to the previous year, 2020, so to say, you would see there was an 8% growth in the consumer lending market. So it's an emerging space. Everybody is becoming conscious. You know, people are getting aware daily on the need for them to take monies to meet up one or two needs. Why do people take monies? Is a question. People take monies to meet their needs. People take monies to pay hospital bills. People take money to buy houses. People take money to pay their rent. People need money to pay their school fees of their wards. People take money to buy cars. People take money for things that they know would profit them or would better their life in one way. People take money for businesses. People take money because they want to improve their business. And we cannot overemphasize the need of the consumer lending institutions in our space today. It will take me further to understand, yes, people need all of this. They need money to meet all of these personal needs. but we need to understand, should people just go take these monies because they want to meet their needs, and not understanding if they actually qualify to take the so-called loan to meet those needs. So it takes us to a position why we are discussing today. What we are discussing, what are the things we need to do to improve or to make us keep getting loans from the lending institution. So to say, Sofri, which happens to be one of the institutions today that gives out this loan to the public. What are the things people need to take these loans, and why do people get even rejected when they apply for loans? These are the questions, the questions before us, and I think we have answers to these questions. I'll be talking on talking about 8 reasons or 8 steps to follow for one to access consumer loans in our current situation today as a nation. First, I would want to speak. We have identified that yes, we need these loans to meet our needs. But as individuals, we need to run a check first. When we say we need to run the numbers, now people in the society need to look at who they are. Do they have the capacity to take these loans? What do they need the loans for? Even when they identify they need loans for specific purpose or reasons, so to say, they need to run the numbers. How much do they need? What are the challenges they have, and how much do they need to meet these needs? They need to run the numbers and see that yes, they know how much they want, and then they are able to meet up. They should have some form of financial positions to accommodate that loan. So you need to run the numbers. It's not just you identifying, yes, I want to buy a car. You need to know how much is that car you want to acquire, and how much are you worth at that time? Can you meet up the repayment on that loan? So people need to run the numbers and then understand their position and understand, yes, they can meet up the obligation, whichever they said, which they have set to they've agreed or they want to step into, which is the loan, so to say. And then when we run that, then we need to look at the other side, the background side. We want to encourage people to do their own self-credit check. They need to understand their credit worthiness. They need to know, yes, previously, what is their level of, what is the character they have. They run their credit check and see, yes, can I access this loan? Have I defaulted in previous loans? If I've not taken a loan before, so to say, yes, personally, do I have the capacity or the character to pay? Am I someone who keep to obligations, so to say? So when we say run a credit check, it's not tied to just looking at the credit bureau, looking at the data he has defaulted in the previous loan. We have some sort of moral credit check as individuals we need to carry on ourselves before we come in to say yes, we want to access loans from institutions. I will ask ourselves pertinent questions. Am I credible enough? Let me do a moral credit check of myself. Do I have that potential to keep to my word? When I take this money, I would meet up with that demand. Then, before you look at considering the options you have, what are the options before us? Who, where, and how do I get these loans? We have so many institutions today that offer loans. We would want to tell you Sofri is a brand that you can access your loan at ease. You run to the Sofri brand, you get your loan. So Sofri is the right option for anyone who wants to access a loan to run to. After checking considering the options you have, you also look at you would want to look at how do I now choose my loan type, because we have different loan types. Yes, I need a loan. I've done self-credit check that yes, I'm worth taking that loan. I would meet up to my obligations. And now, yes, I have an option. The Sofri brand is my option. I want to run to Bank Sofri to get a loan. There's this beautiful bride in town, and the bride is known by everyone. They've been advertising, and it's called a Sofri bride. Oh, yes, I've made my choice. I want to go to Sofri to access my loan. You need to go a step further to ask yourself, what type of loan do you want the Sofri brand to avail you? It takes you now to x-ray the various options you have with the Sofri brand, and you look at the product and profile, the different kinds of loans you have with the institution you so desire. Now, Sofri is there. In the Sofri suite, the Sofri product suite, we can talk of the personal loans for people who are employed. You talk of the auto loans. You want to buy, like I said, people need loans to buy assets. One wants to acquire a car, you take the Sofri auto loan. You want to pay for your rent. There's a Sofri rent loan there to meet that needs. And also you need that quick loan to meet make some quick fixes, such as fixing your car, paying fees for your wards, paying meeting hospital bill demands and all. We have the Sofri quick cash. There are short-term loans that meets people out there can access to meet their short-term needs, and within a period of max of 90 days, they made their payment, and then they move on. So we go further to understand the type of loan. We need to choose the type of, because if you don't choose the type of loan that you need to suit the specific purpose that you need to the specific purpose you want to desire or demand you want to meet, you end up having a mismatch. You may end up going to take a long-term loan that is needed to just fix a short-term need, and in that case you find that there's a mismatch there. Or you could, if you don't drill for down to understand to choose the type of loan you would want, you would end up having to take a short-term loan to fix a long-term need, thereby having a mismatch, and which could lead to some sort of loan default in some cases. In some cases, so we need to understand all of this and know the type or the right kind of loan. If it's a mortgage loan one needs, you don't need to take a personal loan to fix that problem, because mortgage loans are expected to be for longer tenors. So, as individuals, we need to to choose the loan type, the appropriate loan type, before ascending to, oh, this is the loan I think I would want to go for. Now, when we've talked about 3 or 4 steps now, 4 steps, so to say, the fifth step, you need to stop and look at the best rate. You need to look at the rate. Don't just rush into taking loans. You need to look at the rate. The pricing on the loans, are they affordable? Is this something you, as an individual, as an obligor, you can afford? You need to look at that. If it's something you can afford within your own plan, then you can ascend to it. With Sofri, the Sofri brand, our rates are quite competitive, and I think these are rates you can actually they are very competitive in the market, and for anyone who wants to access either short-term, long-term loan, the Sofri brand, I think fits into to attend to that need of the individual. So one needs to look at the rates, and the pricing is key, so that we don't have issues in the future where the income cannot meet with the repayment of the loan. And we also need to, we have said this, picking your lender, which is choosing who you want to take your loan as an institution, as an individual from, which is run to the Sofri brand. We are here to service you. It takes us to the next point. We need to look at the documentation side of it. As obligors who want to access loan in a market like this, we've talked about financial inclusion, and we talked about financial exclusion and financial inclusion, and we said one of the reasons why people don't have access to financial services has to do with lack of proper documentation or the right documentation to own an account So also we identify that people lack funds, they don't have access to loans to meet their needs, which is a problem. It has made a lot of people to be excluded from the formal financial setting. Now, when you want to access loan, if you want to be included in the system, so to say, in the financial inclusion side of things, you need to also look at the documentation of the loan you want to access. How rigid are the documentation process? The documentation, is it seamless? Is it driven by technology? Is it something you can access, you can lay your hands on? Primarily, the system has the Nigerian banking system has given some basic requirements for loans, for account creation, account opening, and all of that. For the software brand, it's easy if you want to access the software loan with less documentation, just a means of national ID, and you have your smart, your phones, either Android enabled or iOS enabled phone. You can create an account with the software brand, and right there you can even access the software quick cash loan. For the software salary express loan for the employed people, uh, less documentation, means of ID card, 6 months bank statement, and with that, we are good to go to help you have an account and even give you a loan if you meet the other conditions. So, as individuals who want to take loan in a system like ours, in an economy like the Nigeria economy, you need to also look at the necessary documentation, what you'll be providing. Are there things that would not take your time? Are there things that would not create issues for you? You need to factor all of that. Permit me to say the Nigerian space, lending space has grown over time, that uh, more players in the market are tending towards leveraging on technology to drive service in terms of documentation, lesser documentation today. So I think we're in the right direction as a nation, as an economy. We're in the right direction when it comes to loan documentation. Now we need to look at the last part. Uh, when all of this, you come to the point where you need to look, can I accept the offer that has been given to me by the institution? If you accept the offer, then you need to start making your repayment. Your repayment is key. Your repayment is very key. Now, this is where we have to look inwards as people who want to keep coming to have access to loans. Our repayment today will determine if we will have access to cheaper loans tomorrow, if we will have access to loans with better conditions tomorrow. What am I saying? You have access to loan from an institution. You have access to loan from Sofri. For you to have a repeat, for you to enjoy repeat loan service from the software brand, so to say, you need to make your payment timely. As not making your payment timely will affect your credit records with the credit bureau, it will affect your chances of taking another loan tomorrow. It will also affect uh, your disposition to the lending market, so to say. Other institutions would not want to lend to you when you are a perpetual, you fail perpetually to meet your obligation. So, like I said from the onset, I said one needs to understand, create the purpose, understand the purpose why you want to take a loan, and ask yourself, do a self credit check on, am I truly ready to make this commitment? Am I truly ready to go with this loan? If I go with it, do I have the potential? Do I have the character to meet up this obligation? Because when you accept a loan offer and you fail in meeting the obligation as at when due, it is recorded against you on the credit bureau, and it will hinder you from getting cheaper loans. It will hinder you from getting loans from other institutions. But if you pay as at when due, you pay your repayments as at when due, you pay on time. By the time you are coming back to access loans, the institution could go as far as giving you a discount for good repayment history. The institution could go as far as doing some cross-selling for you, giving some form of rebates. So there are a lot of benefits you enjoy when you pay your loan on time. And we advise people, you should understand not to have a mismatch. You should know, take the numbers, run the numbers, know how much you want, know how much your income is, so that you don't have a mismatch, and understand the purpose of the loan, understand what you want to, the type of loan you want, so that you don't have a mismatch from the source of income, what's your salary, so to say, if you are a salary earner, and your loan obligation is higher than what you earn, which is far above your debt to income ratio. All of this would shrink your purse, and you may end up defaulting on your loan obligation, and it will end up affecting your credit records with the credit bureaus, thereby hampering you from taking other loans that would support your livelihood and take you off the poverty radar. So I would want to conclude here, because we should understand that loans are not bad. Loans are good to help us, support us, to make us meet our daily needs. Loans are there to support our micro our lives, and in the end, it improves the entire economy of the system, and that is why the United Nations, under the United Nations Sustainable Goal, uh, has advocated that nations, for them to resolve some of the poverty problems they have, they should key into financial inclusion. They should build structures, build policies that would support financial inclusion, where people can be included in the formal financial sector, and they can access loans, they can access banking services, they can have access to financial literacy. They can do a whole lot. When people at that level get loans to support the economy at that micro level, that small level, it ends, it brings more into the economy. It supports the economy. It takes them off poverty, and it makes life better for everyone in the economy. Thank you very much. Thank you for your time. Thank you for listening. I would want to stay back a little to take some questions, and so that we can look at it and learn further. Thank you very much, and thank you, Austin, for this opportunity.
All right, thank you so much, Mr. Barnabas, for the talk. It was quite enlightening and educating. I really appreciate you for making it out of your busy schedule to give us this pep talk.
Thank you.
However, there are a few questions I believe that during the course of while you were talking, I said, okay, you need to, take some things out. And part of them is, say, for example, a loan applicant applies for a loan, for Sofri loan. Sofri is a loan company who give out loans to people. So, say, for example, a person applies for a loan and maybe has all his documents, maybe except for one of his papers. Maybe he has international passport but does not have the name, or he has the name, he does not have international passport. Would that be a hindrance to being rejected for a loan?
Thank you very much, Austin. There are standard requirements for standard documentation requirements that the CBN has laid out for players in the market to for account opening, for loan, for assessing loans and all. And one of those requirements has to do with the means of identification. So the rule is simple. It's either of the valid means of ID that you have x-rayed, you have talked about. One needs to have either name or international passport or a valid driver's license. So to access a loan, you don't need to have the three of them. You just need one of them to access your loan with any
Okay.
institution.
All right. Thank you so much. So in a scenario where somebody doesn't have either of them, maybe he doesn't have, maybe for whatever reason, his international passport has expired, his name is yet to do it, probably because of their issues in doing, getting a name, and he wants to secure a loan. Does that mean that such person will automatically get denied, will get loan denied?
So, like I said, there are statutory requirements, which are the means of ID, the valid IDs, which I've mentioned. However, with the software brand, we have created our bank in a way that on our digital bank, you can onboard, we can welcome you into our ecosystem even without your ID. However, I will restrict you to certain levels of transactions, and by the time you have access to one of these means of identification, we will upgrade your account to the next level. So the regulation allows for some tiering of accounts, so to say tier one, tier two, and tier three. We have modeled our system in a way that you can onboard when you come into our system. We create an account for you. We will encourage you after then to go get your valid means of ID, so we could upgrade your account and allow you run or take the full benefit of our ecosystem and do your transactions freely.
Okay, so you are saying that anybody can open an account from anywhere just using the mobile app for software?
With your mobile, with your mobile number and your BVN, you are onboarded to the software digital space.
Okay, okay. So that's great news. Okay, all right. So moving on. So based on what you were talking about, some people, some persons, or some bloggers online talk about credit scores, or loan lenders talk about credit scores, that you need to have a certain credit score to apply for a loan. Now, how do you build your credit score? What is the basis for it? How do, let's say, for example, for a person who is accessing loan for the first time, or for a returning loan person who probably have access loan in other loan lenders and they want to use software, how would they know that their credit score is high enough for them to be approved or get their loan disbursed to them when they eventually apply?
Thank you, Austin. I would rather encourage people when you take loans. I encourage people to always meet the obligation, pay your loans, because you would have the need, and there will be a need for you tomorrow to access loans. And if you default in your previous loan, certainly it's going to affect your credit ratings. And then when you go to another institution to access loan, these institutions will drill down to understand your credit history, to see performance and to see if you are truly worthy, credit worthy for you to access the loan. Now, on the other side of the credit score, every institutions have built models, algorithm that determines who and who they would give out loans to. So there are a lot of combination of variables that that has been built to come up with a credit score. It doesn't necessarily mean your previous credit history. It's just one of those variables. For so many institutions, it depends on what their risk appetite is, so to say, and then they build the algorithm to suit their risk appetite, in the sense that a lot of factors could be looked into. Where you work, how much you earn, what has been your previous credit history. Um, you know, where some institutions go as far as where you reside. There are a lot of other risk variables that can that when you put them together, you can generate a credit score to be a benchmark for people who want to access your loans. However, the major thing, what we advise people out there, is to ensure that whatsoever loan they have accessed in any institution, they should pay as at when due, because that is the primary thing. It borders on one thing, and that is the character of the obligor, which is key in whatsoever credit assessment that is to be carried out by any institution before giving out loans. So I want to encourage people: do not take loans that you don't have capacity to pay. Take loans to meet the purpose or the need that the purpose you have identified, the need you have identified you want to meet. Take the loan to cover that need, so that you don't find yourself of biting more than what you can actually chew, thereby leading to default, which will affect your entire credit score. So pay your loan on timely so that you can access more loan. You can get cheaper loan interest discount on your loans.
Okay, so we have a person here. One of our viewers is asking a question. So this user is saying, what is the effect of taking a long-term loan for a short-term obligation?
So I would answer this question the point of from the point of wastage, so to say. Now you have identified your need um, is a short-term need, and you want to take a loan for a longer tenure. When you know the excess, what you want to take the loan for could just be for 1 month, and after 1 month, you may not need that loan to meet. You may not need that loan to do anything. Why not take a loan that would cover for 1 month and you meet up that obligation and you move on? But for some people, they want to take longer tenor loan with huge, because they feel yes, their DTI can accommodate that. They go to as far as taking a loan for 4 months, when actually the need they are about they want to meet is just for 30 days, and they thereby extend the loan amount because they have capacity to take. And when they take that loan amount, um, they end up meeting their need at that time and thereby diverting the excess fund into some other things that may not be of priority to them at that time. Now, the issue is not taking the money to meet your needs and to meet, to divert into other issues that may be of less importance to you at that time. The issue of repayment comes in. Remember that the longer your loan tenure, the longer your repayment would be.
Repayment.
So at that time, we are just humans. The human factor plays in, and you start asking yourself, why did I take this money? Why did I take this loan that I needed to meet up a short-term obligation and all? And you start seeing yourself, some sort of repayment fatigue could just set in. It's just normal. It's the human nature. Now, longer tenured loans, the likelihood of repayment fatigue setting in is natural. It tends to occur in some cases. When you take a loan, say for 4 years and the likes, it is when you are paying. You now see that some sort of naturally, some people just feel repayment fatigue setting. I've been paying this thing for too long. What did I use the money for? I only bought a car. The other money I used for, they start. There's a mismatch there, and that human mentality of um, repayment fatigue, I've been paying for too long, could even lead them to stress and thereby making them default on their loan obligation, which in the end will affect their credit bureau records. So we need to watch all of this.
All right. So, Mr. NDD, I hope we've been able to answer your question. So far, if we haven't, please let us know. If you have any other question, please type it out so we can read it out. And so Mr. Barnabas here can answer. All right. So while we are still awaiting for those who have questions to write in their question. So some persons have tried applying for business loans via software. Can a person apply for business loans via software loans?
So our software quick cash is open to employed and business owners. We have built algorithms that would look at the loan and then give the best loan offer to our numerous customers who come on the platform. Now, speed is key. You go to our software app to access loan. Our speed is our watchword. Even on our regular loans, we deliver within less than 2 hours. On the software app, it's less than 2 minutes. You get your loan. So it's open to both employed and business owners.
Okay, so for a business owner, say for example, a business owner wants to take a higher loan, because the software loan is between 10,000 to 100,000. If someone wants to take like 2 million, 3 million business loan, can software or does software have that facility to offer business people?
Yes, yes. We are in the business of lending. We're in the business of micro lending, and we are licensed by the regulators. And we have the mandate to provide loans to both employed and SME, self-employed. So we are in that business, and we will not turn down any business that comes our way. However, once it goes above our obligor limit, we refer to our sister company as City Homes, who have the mandate to avail loans above certain bands, SME loans above 10 million, above 7, 8 million, and the likes goes to our sister company, City Homes, to handle. But anyone within our obligor limits, yes, we look at it, and we avail loans to them.
Okay. All right. Okay. So we are still waiting for your questions. If you have questions, you can ask us right now. So now coming down to loan lenders, as we know that we have some people currently servicing loans with other loan platforms. So say for example, somebody is servicing a loan, an existing loan, but needs another loan for another purpose. Say for example, the person takes a loan to pay his school fees, and now he needs to take a loan to pay his house rent, for example. Can and he's already servicing the school fees loan already. Can he, like, what will be required to take a rent loan? In addition to the already servicing loan, does he need to take any special requirement, or are there special things he needs to take note of when taking
So
this?
thank you, Austin. You can see I had to take some, I had to pull out some smiles when the question was coming. Truth be told, you don't have a customer can take as many loans as he can, provided he has the capacity to pay those loans. Now, there's what we call debt to income ratio. Some call debt service ratio. Now, we look at it is also the regulators have advised on a certain percentage that you consider when a customer come to you to access loan, and that I think is around 33 112. So, what you do as an institution, the customer has a running loan with another institution. You look at how much is he paying for the loan he has with another institution, and then you look at the allowable position that he has when you consider the debt to income factoring ratios, and that allowable limit is what you should be able to access, to allow him access loan where he's going to fall within the allowable limit. So you must consider what he has with other institutions before you avail him your own loan, but it must be within that allowable limit he has. If you don't do that, you happen to find yourself putting the customer in a very dear position, a very difficult position in the end, where the customer may end up defaulting in repayment on either side of the loans he has. Could be the other side, could be yours. And as a responsible and professional organization, in Sofri, we would not do that. We would not want to put our customers in a position where they would default in their loans, thereby affecting their credit records. We will encourage our customers. We have a system where we provide professional advisory services to our customers, where we let them know, yes, you want to take the loan from us, we want to avail you the loan, but we need to look at, oh, you already have this, you already have that. If we give you above this band, invariably we are choking you, and that could lead into some putting you under no stress, and then you may end up defaulting, and it will affect your credit records. So we have that advisory service, and we offer our customer that it's part of what we do as a professional institution, and we are highly compliant with the rules of our regulators. So it's nothing. There's no crime saying the customer cannot take multiple loans. It's just it must be within uh, um, the regulatory framework, and you must strike a balance as an institution and provide advisory service where necessary to let the customer see that yes, he or she has exceeded the required limits.
So technically, if somebody is servicing an existing loan that is one third, as you said, it technically cannot take another loan.
Shouldn't have, so to say. But you can't once the customer meets once it's within that limit, like I said, you can avail. But once it's above
that
the limit you have set as an institution,
the approval rate.
yes, you have the option to advise, and
Yeah.
where you if the customer is still within that band, you can give a counter offer to the customer. Say, sir, you are asking for this, but this is what you can take, and we can avail you this at this time. So it's more about that professional feel that you provide to your customers, and which we are very happy and we're very proud that with the Software brand, we have that structure, that model in place where we advise our customers. I will look beyond giving the loans. We also provide that support system to our customers. We give the pre-support system and the post-support system after the loan. Once the post-loan support system, once the customer accesses the loan, we also do a post-loan support process. We check the customer. We try to see yes if the purpose, what he wants the loan for, has been able to meet up that need. We give some advisory on how customers will make repayment and follow through to understand if the customer is comfortable with our service, so that we can do, there will be repeat buy from us. So with the Software brand, we have that pre-sales and post-sales support mechanisms in place.
Okay, so let us take a question from Ndidi. Ndidi asked a question. So he said that what would you say is the major cause of loan defaults? Some say it is high interest rate. Some say it is the character of the business owner. Some believe it is the business environment. What is your opinion on this?
For me, I would not take this. I would I would not say it's the business environment, so to say, because we have enumerated a lot of things we need to look out here before accessing loans, and some of the things we enumerated here, you need to run the numbers yourself. You need to look at it. Then you need to do a self credit check to see that do you have the character to take this loan. Now, if you don't have the character, why go into accessing a loan? Yes, we find ourselves in a particular environment where we don't have a good credit system, we don't have a good social security system where we can mitigate against some of these excesses, to check character, to check, basically to check character. We don't have that structure, that environment, but yet we cannot blame it on our system. As a nation, we're an emerging economy. We have built a supporting system for lenders to check and see probable customers that will default when they come to access loan. We have the credit bureau, for instance. We have the credit bureau. We have some other systems put in place for lenders to check. However, I wouldn't want to say it's the environment. I would want to liken it. To one, character, and I would not want to say it's the high interest rates, because when you come to take a loan, you have been given an offer. If the offer is not suitable for you to meet that need, do not accept the offer. And that is why I said when I was enumerating the things to look out for, so that that would help you improve your loan frequency rate or your loan approval rate. I talked about interest rate, the pricing. We must be conscious about that. We must look at the pricing, not because you want to solve a problem. You accept a loan way higher than what you can pay. The pricing is high, and in the end, you start defaulting, and you are passing the buck to the interest rate given to you, when the interest rate was explicitly given on the offer and you accepted the offer. So I would liken it to more of character. Character is key. Character is key, and most lenders would not want to violate the rule of capacity, looking at can the customer afford to pay, and thereby advancing the loan above what the customer can take. So it's more of character. And like I said, our system too, we understand, yes, we don't have some of these, our credit level, our credit awareness level is growing. is still less than 50%, so to say, when compared to developed world. But I think more what plays out here is more of character. People just don't want to pay their loans when they take loans. Yes, we have grown. The awareness is growing. We have grown from where we were, where we used to be 10 years ago to, but there's still room for us to improve as a system. So I wouldn't want to liken it to just one variable. But I would say character is key. There are other variables that could lead to default. I agree. Yes, there are other variables, but those variables I think we shouldn't liken it to just character. There are a lot of variables that could, but for me, more I would say the character matters a lot. If I'm taking considering a loan, I'll look at the character of the individual because there's willingness to pay and there's the willingness not to pay. Some people have the funds to make up their loan obligation, but they are not willing to do that. So in that case, it's character basically.
Okay, thank you so much, Mr. Barnabas. Indeed, I hope we've answered your question. So if you have more questions or you have things that pertain to software, let's share it before we round up. We'll be rounding up soon. All right, so we'll round up with about repayment approaches. We've been talking about taking loans and you know what you need to do to increase your loan approval rate. And so far, so good. We've talked about a lot of things, and we've talked about what you need to look out for and a whole lot. So now let's say, for example, you are working with software, we've disbursed the loan, you meet the document, you've submitted the necessary documentation, you've been approved, and the loan has been disbursed. Now you want to repay the loan back. How do you do that? So I'm sure some people will be asking, especially for our new customers, how do I repay my loan back? Will the money be deducted at source, or will I need to fund my account to pay for the loan?
So with the software brand, we have various means by which customers can repay their loans. We have different loans, and these loans come with different repayment methods. For our software Salary Express, for those in the public sector, repayments are deducted from source. We have a partnership with the Office of the Accountant General, and funds repayments are taken from source for that loan. For the private sector loan, major repayment method it's direct debit mandate. We expect we set up the direct debit mandate on the customer's salary account, and on the loan anniversary date, the customer account is debited, and then we are credited. We get our funds back. We also have other repayment methods. We have Remitter is another direct debit platform where customer can also activate from his or her bank, and on the repayment anniversary of the loan, we debit the customer's account and credit us. We also have Paystack. Paystack is a card-enabled repayment platform. We activate the Paystack on the customer's salary account. On the date of the loan anniversary, the account is debited and credited to us. So these are the means, the payment means that we have in software today. So repayment methods are enormous in the market. So a lot are coming. We are even taking more. We don't want to restrict. We are a dynamic institution. We're looking at Flutterwave, engaging them. We're looking at two other repayment sources. We want to expand our repayment collection framework so that we can reach out to as many customers, and can also make life better for our customers at the comfort of whichever they think is suitable for them and less stressful for them. They can activate that repayment mechanism, and then we take that to collect our monies from them.
All right. Thank you so much, Mr. Barnabas. This is Sophie. If you want to learn more about Sophie, just go to sophiesophie.com. You would see, if you want to download the app, if you're interested, you want to open an account with us, just go on sophiesophie.com website. You will see the app link there. You can download the app right there with your mobile phone. Either you scan it if you're using an iOS, or you just download the app directly to your phone, or you can go on the App Store and just type Sophie, and then you will see the app. You download it, you open an account. You do not need to come to any bank. Right from the comfort of your home, you can just open a bank account right there and there and start making transactions, start making deposits and transfer. If you are a little lost as to how to use the app or how the app works, you can check on our YouTube channel here. We have a few videos we've dedicated for you. Now these videos will help you on how to transfer funds from your commercial bank account to your software bank, and from your software bank to other banks, how to set beneficiaries of, maybe you want your loved ones or your father or mother that you send money to consecutively on a monthly basis. You can save their names, you understand? And one of the things where we talk about in software is that we have one of the fastest delivery rates when it comes to transaction, which means that if you can maybe buy an airtime or pay bills, you get the alerts instantly. You don't have issues like network. Oh, the network is coming, I'm waiting for network to come. Or, oh, the bank servers are down. We don't have that issue. You just have a seamless transaction process in terms of paying or buying anything with the software. And if you also want to get a software ATM, or you want to get that to buy things online, you can also get that directly from the website. You don't need to go anywhere else. All you just have to do is just go on the software app, software. Then you see the power card. There's a place on the homepage that has power card. You click on it, you put your name, and then you get directions on how you can get your this, and then you fund your app, and then you get your card. As easy as that. If you still have any more questions, like I said, the videos, there are dedicated videos to answer your questions with regards to how to use software on this YouTube channel. You can subscribe to our channel so that you can get more notification and get more information as it pertains to loans and as it pertains to the software brand itself. And if you still need to learn about our other products, like we have investment and savings, you can still check on our website. Like I said, software.com. You see all the information that you need right there. So we'll be coming to an end to our live stream session with regards to how to increase your loan approval rate. If you still have more questions with regards to how you can increase your loan approval rate, just go on our website and contact us, send us a mail. You will have an agent, or alternatively, you can even chat with us real time and you get a live agent answer you. All you just have to do is just go on the software website. You see a live chat on the website. Just click on it, type and ask your questions, and you have an agent attend to you as swiftly and as easy as possible. So we've made it easy, and we've made life easy, because as software, it's all about making life simple and easy. So thank you so much for being a part of this stream. I thank all our viewers and all our listeners that came to come listen to us. And so we look forward to seeing you again. We're going to be having other sessions, we'll be having sessions like this. So please stay tuned and follow us on all our social media handles. Just go on Bank Sophie on Instagram, and then you can also follow us here on YouTube. And then you'll get more updates as we release more videos as it pertains to how we can make life for you easy, and the fact that here at Software, we are here to serve you, we are here to give you the best, and we are looking forward to seeing you smile when you get your loan disbursed to you easily and your repayment made swiftly. Thank you so much for being a part of this stream. We see you all in our next live stream video when we come up same time next week. See you soon.
Thank you.
Bye-bye.
Bye.